Hello traders, and welcome to another weekend's market forecast video. So hopefully everybody is having a great day and a great weekend so far. So let's have a look at what we can expect in the overall view in the market for the upcoming week onwards. So if you are new here, quick disclaimer, these market forecast videos, they're just general bias of the market that we can expect a bigger reaction. And of course, don't take these as recommendations, but these are just guides that you can use if you already have your own way of trading. So if you want to get our personal recommendations and understand the market in detail and how we like to trade, feel free to join us with the link in the description in our membership service. So then you can see how we like to trade the market and when and why. Okay, so that's just a quick disclaimer. So let's see what we can expect for the upcoming week, starting of course with the dollar index. Getting into the year, we expected the market to give us start giving us a reaction from this extension area we are trading in at the moment, and the market seems to be in a phase of an ending structure, and soon it should be giving us a reaction to the downside. Importantly, we would like to note that this week we will have the US CPI on Wednesday, so you should also pay attention to that day, because it's very also likely that there might be a situation where there can be a false breakout and then a fast reversal to the downside. So keep that in mind as well. Regarding the structure of the dollar and the area that we are in at the moment, of course our members know why we should start seeing a reaction to the downside, and this is the bigger move that the market is going to provide soon, heading into the next week or the week after, right? So if you are trading any dollar related pairs, this is just giving you a warning sign that the dollar reaction higher that we had from September is approaching to a possible end, and that's the main idea that we have at the moment, for various reasons that obviously we also explain to the member service. Again, as we explained from the previous weekly market forecast video, that the market might have been doing something like that before a break to the downside. So based on this price action, so far the market is telling us that there is not much of a further strength right here, and soon enough a reaction to the downside can take place for the dollar yen as the main next bigger move of the market. So that will be more clear entering this week onwards. Euro dollar, similar to the dollar index, inverse, is approaching to an end of this decline that we have been from the 25th of September. Of course, here the buyers and the sellers can get into a fight, and the market can still be doing something like that before it reacts to the upside. So keep this in mind, especially during this week with CPI. This is a possible scenario. Of course, if you remember, we have also the midweek live session, so we will get to the market even before and after the CPI. So once again, this is just general bias of the market. We are expecting a move to the upside. Our members know exactly why, and why we can see the euro dollar retesting the 108 area. So those are the things that you need to know if you want to be a trader that takes your trading to the next level. You have to be able to see the market ahead of time and look for value trading opportunities. Of course, as I said before, this is not a recommendation, but we can see this is the next move in the euro. If you remember, you know why we don't like the Forex market in the last month, and where and which asset class we see most of the value, which is already giving a very big reaction so far. So as I said, those things you can get access to them as well if you are new here, if you decide to join our membership service as well. So if you trade euro dollar, just know that the market here is ending a structure and is going to have a reaction very, very soon. Even from this week is very likely that is going to create a pivot. For the pound dollar, similar to the euro dollar, we are approaching an end of a cycle. So this can also provide us with some more downside. It's absolutely possible. So this week it might be a possible pivot week for the pound. So we can have reaction, some fight between buyers and sellers before we go to the upside. So this is just, again, the bigger move that we are expecting. Of course, the value area for sellers, it was the end of September right here between 133 and 134. Here we have also provided with this bounce to the upside with also exactly during this drop on Friday's London session on the 22nd of the month. There is also a post. If you scroll down through our page posts with the link in the description, you will see that there was an update for members exactly on that day. And we have said that the market should have retested the 128 level. There were previous videos that we made as well. You can go back and see. The market touched exactly the 128 and then provided a reaction as expected. And this reaction turned out to be a stronger one and thus opened a bearish sequence for one more cycle to the downside. And now we are entering into a pivotal moment for the pound that we can expect some reaction to the upside, but the market can take a few more days right here before it does. So that's why it's important that if you don't have your own way of trading and you don't know how to manage these specific cases, those are just biases of the market that we have for the bigger market move. We don't really like to follow small moves of the market. We like to follow the bigger moves, and this is how you increase your profitability as a trader. So as you know, pound as well, like the euro, getting ready soon for a reaction, and this is the main bias of the market. Gold, of course, our bias was to the upside after this pullback. So this move has probably confused 90% of the traders again, but not for our members. So we knew all along after the 14th of November, after we seen this specific move in gold, that a pullback phase will be another buying opportunity. So the market has provided us with an accumulation at the end of the year and now is heading to the upside. So we can overall still see more upside in gold for the time being, and we are not expecting anything else at the moment. So this week it could get volatile, as we said, with the CPI. So if you don't know at the moment, you shouldn't be looking for anything because the market is at the middle. You need to learn how to enter the market at the right prices and at the right time, right? You should never try to risk when the market is in the process of a specific swing or structure. You have to learn how to get in when you have the odds in your favor, and this is what we teach in our service for the members as well. So bias for gold still to the upside. Of course, we cannot rule out here some consolidation, but still the bias should remain supported heading into the week after and onwards. Now for oil, we have also made a video back in December the 11th to be exact. That was a Wednesday, where we indicated that the market was getting ready to provide us with a double correction higher, at least for this Fibonacci extension area, which it has been reached during the previous week, as you can see. So we have provided this specific call as well free here on YouTube, so you can understand that we can see the market before ahead of time in most of the cases, and we are interested in bigger market moves like this one was about in the average target 8%. So right now the market with this reaction higher is telling us that there is some strength in the move higher in oil, but of course this move higher in oil has been driven by specific reasons, which of course our members know exactly what we are talking about right here. We have broken the 1618, which it can be typical if this is a double correction higher. So right now the market needs to give us some hints during the week whether we will see from here an ending structure for a complete reversal, or whether the market is going to just give us a pullback and then do another push to the upside before it falls again. So this is important to understand that still the bigger picture for oil is not a bullish trend, and it is important to understand how shorter term reactions can dictate the market, but which is also the bigger picture. It's very important to know the differences because this is the way that you will learn how to find potential viable trading opportunities in the market and never be a victim by chasing the market in the middle of a sequence, right? That's not how you should trade. You should only trade when the market is at key areas for a possible bigger reaction, right? So that's our bias for oil. We need to see this week what it wants to do, but we can see that it's getting ready soon to have at least a decent reaction to the downside. So Monday, Tuesday, Wednesday should be those days that the market will give us the hints. And of course, we will see that with our members in our live sessions when we get there. So for the S&P 500, as you know, we have expected here to get some reactions, but the market was not ready, as you can see, to give us a move to the upside. And that's why we have explained many times, this is not a market to be chasing and trading at the moment because of a bigger risk of a double correction lower. We can see here that the market is filling up a gap that we have seen here at the beginning of November after this last potential short-term buying area before the pullback. So at the moment, this market is risky to chase it higher, and also you should not sell a bullish market which has higher highs. This is not how you trade the market. You need to trade the market based on the bigger possible reaction within the favor of a trend, unless this is going to be a sideways market like Forex. Trending markets, you never go against them, but observe and anticipate. And if you get what you want when you are expecting a pullback, this is where, if you have your trading system and systematic approach, you can look for these trading opportunities. Of course, if you don't know how to do that, that's why we're here. You can join us with the link in the description, and we can explain to you based on our recommendations as well. So for the S&P right here, we might see a little bit more downside. A reaction can happen soon. However, we cannot deny the possibilities of an extended choppy correction before a reaction to the upside later on. So the market at the moment is a no trade scenario for the S&P 500 for the time being. So as you can see, the right buying areas, they have been long time ago from April and from August. Otherwise, at the moment, this is not a time to trade the S&P. For Bitcoin, of course, we have been sharing our views for a long time. We have been bullish since the summer, which most they haven't been. So those were the right times to look for long possible setups in this market. At the moment, we have reached a minor cycle peak right here, as you can see from this area. But of course, you should be in our member service to see the bigger picture. And from here, we expected at least a pullback. We have seen the pullback. We believe that this is a flat pullback. So it's a contracting, descending triangle and flat correction, which it should resolve to the upside very soon. Alternatively, this one can also extend and it can also do something like that, 80, 87, 85K area, and then reverse to the upside. This is not what we are mainly expecting, but it might happen. So this is a possibility to bear in mind. But the overall bias and trend is for the upside for new all-time highs still to come. So hopefully you have enjoyed this weekend's market forecast video, and you have got value out of it and information. So make sure you are subscribed and you leave us a like so we can reach out to more like-minded individuals and traders, so we can all share with valuable insights about trading, about markets, and many other things. Stay tuned. We will be providing with at least 2 other videos during the midweek. One of them will be discussing the real estate sector, because one of the things that we will be providing here is also valuable information on how we can see things ahead of time, especially for the US real estate. There will be a very interesting video during the midweek, how certain ETFs have provided us with an early warning for the US real estate sector, and why it is important that you should understand that our service, our market analysis, provides in-depth forecasting models, not only for Forex, not only for commodities or cryptos. We can see the market as a whole, and we can give you valuable insights, whether you are an investor, whether you are considering investing in certain sectors. We can give you this analysis, which it will help you to understand whether it's a good time or a risky time to make certain decisions. So that is what it's all about. It's not only about shorter term trading, it's about you being prepared ahead of time on what moves you are considering to do according to your business or investment decisions, right? So enjoy the rest of your weekend. We will see you in the midweek for another video.